So for the sake of those who are not going to make it or are going to miss part of this presentation, it's going to be recorded. And basically, what I want us to look into today is blockchain as a solution, because it has been a while of trying to educate people and trying to clear off different beliefs that people have about this technology. And I think as of now, the right approach is not to just tell them that blockchain is a digital infrastructure, but rather try to help them understand why do we have blockchain in the first place. That's very, very important. Because if you don't understand that, then the term blockchain will be used on so many different occasions against you. Because, sorry, if you do not understand that blockchain is an infrastructure, so it was only innovated to serve a particular purpose, then you will be washed away. So we're going to look at blockchain as a solution. And what we mean when we're trying to say that blockchain is a solution, it's because someone or a group of people observed there was something missing. Okay? So someone out there observed that there is something missing in what we currently have. And let's create a system that fits these particular aspects. And when we get to this point that someone saw something was missing, then everything goes back to 2008 when we had the biggest milestone for this technology, which was the Bitcoin project. I think Bitcoin was the main, or like, let me put it as the best thing that ever happened in the last, few years, apart from AI, because a group of people sat down and discussed openly that the current systems that we have, we need to do something. Like there's something that is missing. And fortunately, those people are very, very smart. They were very, very open and very, very collaborative, to the point that they took ideas from one place and applied them. So they borrowed some cryptography. They borrowed the knowledge cryptography is the main part that runs the blockchain, yes, but they borrowed some aspects from other different technologies, to the point that they found a solution to what they wanted to do. Okay, so when we are referring to the Bitcoin project, this was the main milestone that we have for this technology. And if you ever read this white paper, the Bitcoin white paper, it will say a lot of things, okay? But they will speak of issues about, okay, the problems that they saw, okay? Problems, one of the many. If you have time, you can read the white paper. We had issues like centralization, okay? We had issues about accessibility. We had issues about, how do we put it? Like there was so much control and something which we call vagueness, or no clarity, like no clarity of actually what was happening, especially in the financial systems. And after they saw that, they decided that let's create a project that aims to solve this. So we are going to have a system, okay? And keep in mind, their main focus, let me put that in bracket, like the main focus was on finance, you know? Because by then in 2008, that's when the one of the biggest recent market crash happened. So their main focus was on the financial system. That was the main focus. That's why people always say Bitcoin is money, because when that white paper was coming out, their whole problem was focused on the financial system. Like the financial systems are not accessible, not anyone can register for a bank. Some countries don't have banks. You know, we went to South Sudan. They don't have a SWIFT system. So it means that from Tanzania, you can't send funds perhaps to South Sudan because they don't have SWIFT system. That's lack of accessibility. There is a lot of control. Like you can deposit money in your bank account and they can say you can't withdraw this money. You have to provide proof where you got the money. So when they sat down these people and they created the Bitcoin project, their main focus was on finance. So in return, what they created was, okay, solution. This was now the first successful blockchain, which was the Bitcoin blockchain. And what Bitcoin was successful in doing was to be able to do peer-to-peer transactions without a central, uh, authority or a central validator. So they created a system where you could do peer-to-peer transactions without having a third party to approve. You did not need banks, okay? You did not need authoritarians, these officiaries like lawyers and all that, but you could do peer-to-peer transactions, which could be tracked, which could be seen as legal, not legal, but actually legit, okay? They created a system that was accessible to anyone with internet. You could just download a Bitcoin wallet and you could start receiving funds and so many other things. But what a lot of people did not see through that period was that Bitcoin, the project itself, created a blueprint, which means that we could create systems that instead of having another person verifying, we could do it through the system. What do I mean by that? One of the major issues that Bitcoin solved as a project was something called double spending. Okay? Double spending. Meaning that right now, in the systems that were used, for example, within a bank, if I want to transact, money will be debited from my account and credited to the person that I'm sending. And that is done by the bank. But when it comes to the blockchain, it will be me who will be debiting from my account and depositing to another person. Now, how could we be able to believe that I truly debited myself and did not and credited the other person? Or at the same time, I could send two transactions at once with the same amount. So once Bitcoin solved this, the double spending issue, it created one major shift that we no longer need to trust authorities, but we can trust systems. So once Bitcoin was able to solve the problem that we no longer have double spending, then it means that if I want to send funds and I'm using the Bitcoin blockchain, I am certain that if I receive the funds, they are truly deposited in my account or in my address. So what this did was to shift people in terms of mental mindset from saying that, so if I want to have a valid transaction, I have to go to the bank. But it moved from trusting the system trusting the authorities, the third parties, into trusting the systems that are created. If we are together to that point, please go to your box chat and type 111. If we are together to this point, please go to your box chat and type 111. If we are together, just jump into your box chat and type 111. And we can go on. Okay, that's good. That's good. Now, okay. So now that we have systems that we trust, there is another very important terminology that I need to add in the term systems, is that the systems are called trustless systems. Meaning that, okay, when I say trustless systems, I mean that we do not trust the people, we trust the system. And blockchain achieved this by, first of all, having a public ledger, meaning that all transactions that are done in a specific blockchain can be seen. And this is what people refer to as the pillar called transparency. Okay? Another thing that enabled people to trust the system instead of the people using the system is the fact that transactions were immutable. Meaning that once a transaction is done, then nothing can be altered. So if you send me money, you cannot return it. This is what was referred to as security. And the last thing that made this system now work is that, okay, there was no single authority point. Authority point. Now, this is the third pillar called decentralization. Okay, so it means that within a blockchain system, we have the three pillars that makes the system trustless, meaning that we trust the system and not the people that we are working with. So the issue was transparency, security, and decentralization. And you will hear that being thrown around. But that is what it means, that we have a public ledger, which derives the transparency. The transactions or the data stored is no longer immutable. That's where security arises. And there was no single point of authority, and that is decentralization. And that is why the story of Bitcoin is very, very important when it comes to the story of blockchain. The story of Bitcoin is very, very important because this is what it introduced. Now, fast forward until 2013. By then, some projects were already built using the technology. So they were derivatives of Bitcoin. So from 2009, when it started operating, 2010, sorry, Bitcoin gained a lot of traction. Everyone was speaking about Bitcoin. Bitcoin became famous. And the funny thing is, Bitcoin owes a lot of its success through the black market. Because I want you to go and just what do you call it? Do this research. Look at the relationship between Bitcoin and Silk Road. You just go and do that. That's your homework. Research about Bitcoin and Silk Road, because Silk Road was the first place that a lot of people saw the importance of Bitcoin, because Bitcoin knows no borders. You just need to download the application, you have your address, and people can send you Bitcoin from all across the globe. Anywhere from across the globe, you just get your Bitcoins and you can use them now. You can sell it to another person for cash. So Bitcoin became famous because of the black market, Silk Road. You'll read that and you'll see. Now, in 2013, what happened was a bunch of people, very smart people, smarter than me, saw what Bitcoin was doing and saw the potential that blockchain has been underutilized. Blockchain is underutilized. And one thing that they said was, people have worked so hard to create a system that is trustless, that is borderless, that is accessible to anyone. Why can't we now start building applications on top of this technology? So, applications on top of blockchain. So we already have a system that works. Why can't we build another applications on top of that system? And this is what brought the rise or the birth of Ethereum. So Ethereum was born because people saw blockchain works, but people are underutilizing the technology. We can use this technology and build things on top of it. That was the rise and the birth of Ethereum. So by the time it becomes live in 2015, it was heavily used on creating applications through blockchain. And these applications are called decentralized applications. Or in simple terms, they call them DApps, decentralized applications. So these are applications that are built on top of blockchain. And one thing that I want to clarify before we head any further is that people have been thinking that Bitcoin is money, as I said earlier, because Bitcoin was mainly focused on the financial system. So when people started doing or using Bitcoin, it was only used for transactional purposes. Now, Ethereum flipped the script of blockchain, meaning that let's have a running blockchain, but create applications that are going to be running on the blockchain. So the blockchain is used as the foundation of the technology. So what it means is that these applications, the decentralized applications, these ones will inherit inherit how a blockchain works. So it means that if you're building a decentralized application that aims, for example, let's say at finance, when we're looking, for example, at decentralized application based on finance, we have something called DeFi, decentralized finance. So it's a financial system that uses blockchain technology. So you'll access different services, like normal saving services. You can access loans, loans. You can access, you can lend also, you can lend, you can borrow. You can also invest. You can also do anything that you can do on the financial system. The only difference is that everything that is done is going to be transparent, it's going to be secure, and it's going to be decentralized. That's the only thing. And once people understand that blockchain was just brought in or was innovated for a specific purpose, and then people derived that and created other more powerful things, it's very easy to understand how these things are used. If we are together to that point, please go to your box chat and type 222. If we are together, please go to your box chat and type 222. Okay, that's good. That's good. If you are together, just go to your box chat and type 222. Now, to this point, we already understand two main things. Okay. Let's say recap. Is that blockchain is an infrastructure. Okay. And another recap is that you can build on that infrastructure. But your only limits is that you are going to inherit how that infrastructure works. So this means one thing. You can build anything on the blockchain. This flexibility means that you can build anything on the blockchain. You can build anything. So you can have good projects. You can also have bad projects. Okay? You can have legit businesses and you can have scams. It happens because blockchain is just an infrastructure. So the moment you want to now take the hard money that you have earned and put it in these blockchains, you have to do due diligence. You have to analyze. You have to analyze these projects. That's it. That's basically it. If you want to get into investing in blockchain projects, then you have to analyze because you can build anything on top of this technology. And now with AI, I don't want even to go deep down there, but with AI, the shipping speed has increased. Okay. And we now have a lot of blockchains, and they have made also deployment of these projects way easier. Back then, when things were catching up, it took at least 2 years to build something solid, something feasible. It didn't have to be good, it did not have to be bad, but to just build something that works, it took maybe 1 or 2 years. But right now, it takes a matter of days, a matter of days to ship a project. That is very, very bad. Now, it means now, as an investor, because inside here we have investors, you have to know how to analyze these projects. That's That is now very important. It's no longer about this project is built on blockchain or let's buy cryptocurrencies, but it's now what will make this cryptocurrency uh, uh, bring in or attract investors. Because since the only way to invest in a project is buying the crypto, then we need to analyze these projects. Like you have to sit down and actually ask yourself, don't focus on the money that they are promising you, but focus on like, why would someone on earth come and see that this is a valid project? And what I have come to observe, it's very strange that people are very logical in real world things. Physical things, people are very, very logical. I have met people who are very logical on physical things. Like they want to buy a car. The amount of research that they will do of that specific car, the amount of inspection, they will go with a mechanic while they are going to buy a car, and the mechanic will check some few things and will tell them, okay, this is not right. But when it comes to these digital projects, eh, they don't even think twice. How much is it paying? Oh, 5%. Okay. They sign up. And that's why so many people are losing money when it comes to these projects. Today I was at the Tanzania Revenue Authority. We went to sorted some company things, and there I met people who were very interested to learn. And the only question that they always ask is, "Ka- eh, will I not lose my money?" Like that's the main question that they ask. Will I not lose my money? They're not interested to know how things work. The notion that they already have is that as long as it's blockchain, I'm going to lose my money. So they'll ask you, will I not lose my money? And you know what I tell them? I always tell them one thing. Learn. I'll give you the basics, like what we are doing right now. And then that will give you a position to make your own decision. You know, I am at that age in my life personally where I remember the days when my parents were making the decisions for me. Back then, I could, if something happened, I could be like, I could blame them. And that habit, people are now bringing it into finance, which is very, very sad. Like they are going to want you to make the decisions for them so that if anything happens, they could blame you, which is very bad. It's very disappointing. So once you get to a point where you can analyze these blockchain projects, it becomes very easy for you to actually know where you can invest your money, how you can diversify your portfolio, and you could actually understand what to do. Now, one final thing. Okay, we still have time. one thing that I wanted to add is that there are two things. There is something called the business logic, and there is now the execution, or let's say the blockchain layer. Okay? Two different things. Blockchain as an infrastructure, especially in this DeFi environment or these DApps, the decentralized apps or applications that are built on top of blockchain, there are basically two layers. We usually have the business logic, like this is how a company makes money. And when we're looking at the blockchain layer, this is how, or let's call it the operation layer. And what do I mean by this? And I want you to listen very, very carefully. All projects that are built on top of blockchain will use the blockchain to execute the logic. So if it's transactions, they are going to be executed on the blockchain. If it's, for example, swaps, sends, deposits, withdraw, this live on the blockchain. You stake, you lend, they live on the blockchain. But there is now that business logic, which is within the server or the systems that were used to, which says now, if someone is doing a transaction, we are going to charge them $3. Out of these $3, X amount is going to go to fees, the blockchain fees. This amount is going to pay commission, and the company is going to be left with perhaps $1 or whatever amount. The amount that is left is what the company is going to be using to maintain the system and also get its profit. That is the business logic. So it means that for any project that is built on blockchain, the blockchain is only the operation layer. But there has to be a business logic. So if I want to give an example which is very common in what we have is, we can have these shops, we call them mangi shops here in TZ. So it's always a small shop, okay? So it's a small shop that sells small things that are used by the community around them, like soap, sugar, flour, rice, spaghetti, all that. Now, for any shop to make profit, it means the selling price should be greater than the buying price. This is undisputed. Undisputed. The selling price has to be higher than the buying price. So here the profit is the difference. Okay? Now, if a mango shop was deployed on the blockchain, it means the only purpose of the blockchain would have been to receive payments. These payments are now going to be recorded. You know, you can record on the blockchain, but technically, I don't want to go there. So the main purpose of blockchain is going to be receiving payments and paying suppliers. But blockchain will not dictate what the selling price is going to be and what the buying price is going to be. That is the work of the business owner. I'm going to repeat that again for the sake of everyone so that we're on the same page. If we have a shop, for the only way to make a profit is if the selling price is greater than the buying price. So the owner of the shop decides, because I bought at this price, I transported with this much, and it's going to cost me, for example, deduct the rent from it, the electricity, and all other things. If I sell at this price, then I'm going to make a profit that is going to make my business sustainable. The only purpose of blockchain in such a business is going to be receiving payments and paying the suppliers. It will not do anything with the business logic. So it means that blockchain is nothing but an operation layer, but the business logic has to be clear. And what we say by analyzing the business, we mean looking at the business logic. If that is clear, please go to your box chart and type 333. If that is clear, just go to your box chart and type 333. Okay, that's good. That's good to see that people understood that. So when I tell you, I want you to analyze this project that is built on blockchain, I mean you look at the logic. So this is a very, very deep project. I mean, a very, very deep step going down at actually analyzing this project. Because here we look at the project itself. What is the problem? What is the solution? Where is the engagement point of this project? If they have coins, how many coins are they offering? How are they used in the project? You have to do all that so that you can see that, oh, so there is sustainability in this project. And one final thing before I head over to speak of encryptors, it's very simple. In crypto, when you're analyzing the project, the best projects are going to offer one thing extra compared to other projects, and that thing is something called sustainability, which in simple terms is survival for long time. The only way that you're going to make money in crypto is if you buy a project and it survives at least a couple of years. Because that's the best measure. Because nowadays projects are just coming up, dying, coming up, dying. So when you look at a project and you see that this project is good, they have a very good problem, they have a very good solution, and I think that it's the way it's structured, it's sustainable, meaning that there are always going to be people coming in, and it has a very good logic, then you invest and you give your investment time. Because, for example, there's this coin. I've been really interested with it for the last few days because its technology is just amazing, called Zcash. Zcash. You can just look into it. It uses something called zero knowledge proof, meaning that with this blockchain or with this cryptocurrency, if you're using it, I could send money to my mother, Madam Matilda, and when you look at the blockchain explorer, you don't know where the funds came from, you don't know where they went, and you don't know how much is it. Okay? So it was a project that was designed for privacy. But the transactions are totally safe because it uses something called zero knowledge. Now, it was a coin that performed okay. But when the Russian-Ukraine war started, this coin gave out, I think it was returns of about 10x within a very short period of time. So for a very long time, it was just existing. People who bought back then have been making money. But after the war, since people now wanted privacy in transaction, especially during this war period, then there was a very huge demand for Zcash. And one thing that I always tell people to watch out for is you always want a project where people buy to get a service. Service. Meaning that there are people who are buying Zcash. They don't care about the prices. I want to move $1,000. Let me buy Zcash worth of $1,000 and send them to my partner. And once they get there, they cash out the amount. So they don't care the price of Zcash. They just want to move $1,000 worth of Zcash. So if more people are coming in and buying and it's getting a lot of momentum, then the probability of you making money as an investor is increased. This is something which is very simple to overlook because it's obvious. It's so obvious that you overlook it. You have to make sure that if you're investing in crypto, you have people who are going to come in. They don't completely care about the price of the coin. They just want to get something done. That's what happened to Bitcoin in 2020. People who wanted to trade in the black market, they came in and bought Bitcoin. Not because they thought Bitcoin was a good opportunity, it's because they wanted to order drugs worth of $100. So they bought Bitcoin worth of $100. They paid their supplier, they got their drugs, everyone was happy. That's the point that you have to see. And this is why I say always analyze the project. And as we have seen today, analyzing the project means forgetting that the project is built on blockchain and seeing that this project, what is the business logic? What is the business idea? If we are together to that point, ladies and gentlemen, please go to your box chat and type, okay, this is 444 now. This is 444. If we are together to that point, just go to your box chat and type 444. Okay. 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 Now, one final thing that I want us to look into before we actually call it a day and enjoy the rest of our evening is that this technology, what it offers, it's amazing, but it's very demanding. It's very, very demanding. And for those now who came to hear about Encryptus, it's very straightforward. Encryptus is one of these projects that uses blockchain technology, but it has its business logic. So the business logic is very, very simple that the issue was access to DeFi. There was a very big knowledge gap to access these DeFi services, and Encryptus tackled that by creating a simple and secure, that's very important, secure wallet, or let's call it the interface now, which you could use to access these DeFi services. That's it. That's the business logic. So it's built on blockchain to give people access of DeFi services. So with Encryptus, you could stake, you could do some yield farming, they are going to be rolling out more services. But with just staking, people could make mm, people could make passive income on crypto. mm, Or as the CEO likes to put it, people could be making money through their cryptocurrencies. So you buy your assets, and as you are waiting for time to, for your assets to grow, you can lock them and get passive income. That's it. That's what you need to understand about about encryptors. So you should no longer be judging a project because it's built on blockchain, but you should be judging the business logic of the business. And then now, if it's good, then you do your investment. Not saying that since it's built on blockchain, I will invest. No, but since the business logic is good, then I will invest. If we have any question to that point, please go to the box chat. But if everything was clear, just type 555 on the box chat. If there's any question to that point, please go to your box chat and write your question. But if we are clear, just type 555 so that we can call it a day. So that we can call it a day and actually